Thanks everybody for joining. Welcome to my living room. Usually for the in-person conferences, my favorite part is meeting up and having a drink after. So I got my bar card in the back, but topic of conversation today is going to be risk management and insurance, specifically catered to micromobility companies. There's going to be two sections of the presentation. The first is just a general overview of the micromobility industry as a whole. The second is going to be focused on a new insurance product, which I'm very excited about, developed by our team at FounderShield over the past about 4 to 6 months. And the timing of this conference works perfectly to make that announcement. And I want to give a quick preliminary thank you to my colleague Adam, who is on the back end working on the presentation slides. Here's our mobility team. You'll see myself on the top left. Carl Niedbala is actually one of our co-founders and COOs with a legal background. Justin and Will are the two experienced account executives, VPs, who work with the majority of operators and ancillary micromobility affiliates. I trust them implicitly. They are rock stars. Jeff Hirsch on the legal side and claims side has 30 plus years of experience when it comes to claims handling. Agenda, I already kind of got to this, but state of play, what's going on out there. The common theme as I talk through this is going to tie back to risk management and insurance challenges. That's what we do. That's what we specialize in. It's not always the sexiest industry, but FounderShield works exclusively with emerging industries. So it's a little bit cooler than opinion. And then obviously Q&A. I really do encourage everybody. The goal here is to make myself available. This is going to be a brand new product to the market that is probably applicable to a lot of people who are listening in. Please ask as many questions as you have. I will try my best to address all of them. As you can see, it's just me. I saw a few of the other panels have multiple people. I don't think anyone wants to hear me talk for too long, so I am going to try to keep them relatively brief and get to questions as they roll in. Kicking things off, state of play. There's obviously been a lot of activity in the micromobility sector. There has been consolidation. There has been new permits. There have been hurdles to jump over. And when you think about, take it one by one, when you think about consolidation, whether it's something on the larger scale like jump in Uber, maybe it's something a little bit on the smaller scale like Super Pedestrian and Zagster, there's a lot of insurance ramifications to take into account beyond just potential injuries, right? Now there's changes in ownership. How do the territories in which everybody's operating get impacted? How do the regulatory bodies view this M&A activity? Are there insurance considerations to take into account there? I think a lot of times people think, oh man, my insurance is expensive. It's a headache to deal with. General liability, auto insurance, those are my biggest pain points. There's a lot of other coverages out there that are worth mentioning. Expansion to the UK seems like it's going to be a big thing, and one of our strongest affiliates and partners is based out of the UK. I know they're excited about this. Sorry, Adam, keep going. I saw you went to the next slide. Yeah, this is just little graphic to show what some of the expansion actually looks like. And as there's consolidation, that impacts geographical scope as well. Who's going to buy up some of these smaller operators? Does it make sense? Are there strategic places for smaller operators or mid-sized operators to target, whether it be college campuses, whether it be hotel affiliates, whether it be smaller mid-sized cities, or maybe, obviously, New York City is probably the largest new player in the sector and my hometown. So I'm excited to see what comes of it. But again, I would just say there's a lot going on, and the risk and insurance side of things, it shouldn't get overlooked. I think anyone who's been involved in this industry at this point has realized that it is a hurdle, it's a challenge. Sometimes it's a barrier to entry. what we're doing is making ourselves available to make it a bit easier for all of you. Cool, thanks, Adam. Challenges. It's really the first bullet point. I want to make sure everyone has heard the term telematics. Telematics is the use of technology to track operations. It gives insights such as how fast are people going? Where are your scooters? What are the trends? What are the routes that people are taking? And based on this, how do I use this to make internal changes? How do I use this information to progress my business in a safer environment? It's enhanced the ability to learn in real time. And I can't speak enough about the importance of telematics. Beyond that, hardware maintenance, user experience, these are all things. When you think hardware, who's the manufacturer of these scooters? I want to make sure that I'm partnered with a reputable manufacturer. And again, quick tangent, but I take pride in Founder Shield's position in the industry. We have relationships. We want to provide more than just insurance. We want to be able to make introductions to manufacturers, maintenance providers, so on and so forth. So all of these things, I hope people don't look at insurance just as a price tag. They all get taken into account in terms of really structuring the proper risk management and putting your best foot forward, which I know will result in hopefully, a more affordable end solution here. Keep going, Adam. All right, we're going to start transitioning into what I'm even more excited about, which is going to be our new solution. But what prompted the need for a new solution? Why not just stick with the insurance companies that are already offering the correct products, a legitimate solution, which I give a lot of credit to the carriers out there that we've partnered with. There's no doubt it's definitely a risky venture. It's definitely a new venture. There's not that much loss history yet, but nonetheless, we felt that how can we create a more feasible solution, a more affordable solution, and turn insurance into what really it should be, which is protection for all of your businesses, as opposed to a barrier to get into a new city. So what we did was build a new insurance company. And that is easier said than done. I can promise you that. But the new insurance company is called Fleet Shield Insurance Company. And what does it offer? Fleet Shield is a insurance company specifically geared to offer general liability insurance to micromobility operators. There's going to be coverage just like a lot of you all listening in are used to seeing. You're going to have $1 million per occurrence. You're going to have an aggregate limit of 5 million, and it's going to be a bit more affordable than what everyone is used to seeing out there. Who's eligible? Hopefully everybody listening in is eligible. Shoot me an email, by the way, jonathan@foundershield.com. I'll put it in the chat. The short answer is small and mid-tier operators, scooters, bicycles, any other mobility operators out there. I've seen some crazy stuff. I've seen pogo sticks. I've seen skateboards. They're all awesome. I encourage all of the innovation that there is, but we're looking for mid-tier operators with a fleet size between 50 and 1,000 devices. All right, this is a bit of a look under the hood, if you would. Fleet Shield is what's called a risk retention group. And for anyone who's unclear about what a risk retention group is, it's an insurance company. It's a bit of a unique type insurance company, though. You all, the people who will be purchasing policies, are actually shareholders of the company. And there's benefits to that. You'll actually have small ownership in the company. And if the company is profitable after several years, we have the right to pay out dividends to the shareholders. You'll notice that the first two arrows pointing to our team at Founder Shield represent a membership fee and annual premiums. I don't think anybody who has went through the insurance process is unfamiliar with what a premium is. It's the amount you pay for your policy. Like I said, these are going to be more competitive premiums than a lot of companies have seen previously. The membership fee, rest assured, it is a smaller fee, and it is paid because of the way that a risk retention group is set up. It's a membership fee for ownership within this risk retention group or within the company. Anyway, as the flow chart shows, Founder Shield, with our expertise, we will be underwriting, and Fleet Shield is the insurance company. That will be the actual policy that you receive. I also really think it's important to the community as a whole, the micromobility community, to understand that the current insurance players in the space, the insurance companies, albeit expensive, they're doing a really good job. I tip my hat to them, and there's not many of them. It is a challenge, and hopefully a few of them are listening in right now, because it has created a landscape that has, albeit challenging, allowed companies like everyone listening in to thrive. We made sure we wanted to partner with legitimate companies. We don't want to take any shortcuts. And Apollo, based out of London, Apollo 1969, they are actually in partnership with us in this project. So as you see, there's a reinsurance, as any insurance company needs. Apollo has given us a thumbs up, and I can't thank the guys and gals over there enough for their support. All right, common questions. I hate it, but everybody always asks, what's the premium going to be? What's the retention? What does my policy look like? I get it, that is important. Retentions, again, for any insurance newbies out there, a retention is synonymous with a deductible. For the most part, it's the amount that you'll pay out of pocket before the insurance company will step in and offer coverage. Traditionally, we've seen insurance policies for operators have retentions that are in the six figures sometimes. Our retentions are going to be a bit lower. They're going to be between 10 and 50,000. The limits, and limits are important, not just in the event of a catastrophic type claim where a rider falls off and cracks their head open, knock on wood. I saw there's a question about helmets. We'll certainly address stuff like that. But limits are important to get into new cities. There's expansion considerations there. Our limits are going to be $1 million per occurrence and a $5 million aggregate limit. And then obviously everyone always wants to know what the cost is going to be. The costs are going, this is not going to be an off-the-shelf product. The costs are going to be determined based on the size of your fleet, the best practices you have, the experience you have. We are going to underwrite these risks. We want to make sure we're allowing the correct operators into this risk retention group. But the starting point is going to be a lot more competitive, and that is $30,000 on an annual basis. Adam, anything further?